join in, but welcome everyone to another Glasslake funding webinar. I'm Emily, Marketing Manager here at Glasslake. I'm usually behind the scenes kind of coordinating these things, but today I'm behind the camera and we're going to do more of a conversational webinar for you guys and answer any questions that you guys may have about commercial mortgages and like who Glasslake is, where we kind of fit in the market and what we're all about. So if you could just go to the next slide. Oh. Cool. Next slide. Anyways, if you guys have any questions, just post them in the chat and we'll get to it at the end of this session. We do want to leave some time for that as well. But for those of you who are kind of new to Glasslake funding, maybe you've submitted a couple of deals, or maybe you aren't sure who we are and where we kind of fit in the market. To give you a little rundown, we're considered the new kids on the block. We're in our third year now of operation. And we get asked a lot, like, where do we fit in the market? Are you guys private? Are you guys an alt? And we kind of like to say that we don't fit in at all. We're in our own little stream on the side because we're not technically private and we're not we're not federally regulated either, but we're able to capture clients within both of those segments and beyond. So if you have a deal that you think would fit into, what we offer, just send it to us. We'll take a look because we're kind of in our own little lane and we're able to kind of serve those clients and beyond, which is great. So we like to refer to ourselves as commercial pros, and I have the commercial pro here, Shaun, and I'm just going to ask him a few questions about the commercial lending landscape, what to expect for 2025, what offerings we have, and we'll learn a little bit more about our offerings here at Glasslake. So Shaun, you joined us back in June, and then you took off for 4 weeks for vacation, and we won't let you live that down.
Sure.
Can you tell us a little bit about why you joined Glasslake and what your background is in
Sure. Sure. Thanks for calling me a commercial pro, by the way. I think, in the commercial world and even in the mortgage lending world, we're always learning. We learn something new on a regular basis. So, thanks for the title. So yeah, I mean, as Emily mentioned, I did join Glasslake in June of 2024. Coming out of a sort of all-in, 20-plus career in commercial underwriting. Starting my career way back in sort of the 2002 with Equitable Trust, which was, as we know them today, as Equitable Bank. But back then it was a small institution, much smaller, less than 40 employees. I worked my way up in Equitable Trust at the time. And I left there as a senior manager in commercial underwriting, joined Home Trust in early part of 2008, and most recently left Home Trust to come to Glasslake. I grew the commercial underwriting team, between portfolio management, small commercial underwriting, large commercial underwriting, up to about 45 staff. And then I had the opportunity to join Glasslake, came to me and it sort of made me think about, what I've done over my career and the opportunity to then sort of do it over again.
Right.
So to me, that was exciting. And that's where we are today.
So you live and breathe commercial is what you're telling me.
That's all I've known in my life.
Amazing. Okay, can you tell us a little bit about how you're building the commercial division here at Glasslake, and how that's different from what you've built in the past?
Sure. Commercial, actually, for those of you that don't know, Glasslake actually started with small balance commercial as one of their first offerings to the market, obviously before I joined. But so me coming in, sort of having, sort of an all-around commercial knowledge base and, thinking of how we can sort of grow the team and grow the business. What I'm trying to do is sort of keep everything commercial under one umbrella and not separate, small balance from large balance, although there is obviously the obvious dollar signs that separate them. But, from building a team and building out the business, I want to make sure that, we can sort of service not only the, our broker partners that sort of bring us the smaller deals, but even, any lending partner relationships that we create over time to service them as well with the same sort of core group of team. Yeah.
Okay, that's awesome. Can we actually define for everyone like what is considered that small commercial property niche? Because I feel like there's some confusion around that just because it's so divided for small commercial and large commercial. So what is small commercial to us?
Yeah, I mean, like small balance commercial really is kind of up to the $5 million mark when it comes to sort of the loan size. And when you look at that sort of transaction size, you tend to deal with really just smaller properties. So it's still, you still may have industrial, you may get into industrial condos or even just commercial condos. Sometimes the retail, smaller office buildings, mixed use properties for sure, where you've got retail or commercial space on the ground floor and potentially apartments above, and in some cases it could even be office space above. But usually it's just really a smaller property type when it comes to commercial, the small balance. Yeah.
Okay, amazing. Thank you. We're going to pivot a little bit and kind of talk about the market. What did you see for 2024 in terms of commercial trends, and what do you expect to see this year for trends?
Yeah, I mean, we saw a lot of activity sort of in secondary markets for us at least. We're not afraid to sort of venture into those parts. A lot of activity around that small balance commercial, typically a mixed use. There was a lot of activity in mixed use. We did see a lot of activity in industrial as well, and even in some of the retail and restaurant space. And office, we didn't see too much activity, but if we saw office where it was sort of tenants that were maybe medical related or legal related, and in some cases even some brokerage offices like mortgage brokerage offices or real estate offices, like that type of thing, we were seeing. Obviously, we did experience additional demands on housing, across the country, and we multifamily, 5+ units. We saw a lot of upbridge opportunities there. We do expect to continue to see those. So yeah, I think we're excited about what 2025 is going to bring.
Okay, awesome. And just in terms of brokers who maybe haven't dealt with us before for commercial, if I was new to submitting a commercial deal with Glasslake, what would I need to know? What would I need to include in my submission in order to kind of make it as seamless as possible?
Yeah, I mean, a lot of it is just really knowing customer, know the transaction,
KYT.
KYT, understanding, really the story, the situation that the client either is, what their current financing situation is. If it's a purchase, obviously understanding, what they're getting into. I mean, we do a lot of owner occupied real estate, small business owners real estate. So, in that case, it's understanding, their business needs, their source of revenue, their source of income when it comes to their business, and how we can use that to qualify deals and so on. But really putting a story together that, sort of minimizes a lot of the questions that, underwriters may have, if the information is not quite there.
Sense. So really knowing and understanding that story and then telling that story to us so we can understand it and make it, fit for what we have and make that funding experience as seamless as possible. It's definitely important. I find there's a lot of fear around commercial just because, it takes longer for those deals to kind of go through. But we kind of approach commercial and make it as easy as getting residential deals done here at Glasslake. So, we can kind of remove that fear from commercial. In terms of that, what are some common hiccups that we kind of see with commercial deals, and how can we avoid those hiccups or pitfalls?
Yeah, I think to sort of cover what I was saying, I mean, when we could have situations where we're not being sort of given the story up front, or it's very limited information up front, that creates sort of a bit of a back and forth dynamic that, nobody wants to really go through that because
No.
it can take time and it gets painful. And I'm sure ultimately the client in the end is wondering why, why things are taking so long. I think the other thing is, when we talk about real estate is really what the valuation is of the real estate. And, there could be struggles around to get to what that real value is, right? And, I think, as underwriters, we're going to try to be obviously on the conservative side. And, if the borrower is going to think their property is worth a lot more than it may be, but it's really, so what is that real number that everybody can sort of agree on?
Yeah.
And we've got, our own in-house tools in order to be able to do that. And, I would say, to the broker community, if you're unsure what values may be, then, don't hesitate to reach out and see if we can help, sort of get to what that real number might look like. And then at least it makes the negotiation easier as to understand, how much of a loan are they going to get? And if obviously if it's a purchase, that's going to then determine how much equity they need to put in. Yeah, I was just trying to think if there was another pitfall, but
Hopefully not.
yeah, if I think about it, I'll bring it up. But that's a big one for sure.
Yeah.
On valuation.
Yeah. So I think to kind of summarize that, just send your deal to Shaun and he'll take a look at it. Okay, amazing. Speaking of that, let's kind of talk about what we currently have in terms of commercial offerings and what's next for Glasslake and what they can expect from us in 2025.
Yeah, I mean, I think, what's also exciting about Glasslake is, we have guidelines, but at the same time, we treat them as such. And, it doesn't mean, they're etched in stone and that's exactly the way it has to be done and what we're going to do. And it doesn't mean that, we aren't going to explore other opportunities too. So I know, there are going to be opportunities to maybe get into a 1-year product versus sort of the minimum 2-year. We are looking at adjustable rates to see if that's something that we can bring to market and how that could benefit, the clients. At the same time, we're not afraid of construction. I've done construction lending in my previous life. So, whether it's building, single homes or building, townhomes or whatever the case is, even building commercial, those are things that we're definitely going to be exploring and seeing how we can be an option for the brokers. I did want to mention just a couple of things on that we have that maybe doesn't really sort of get taken advantage of. And one of them is a streamline program where, it's for investor purchasers, and provided, we cap the loan at 65%, and it has to debt service on a one-time debt service coverage ratio. We only require income to be supported really by the appraisal that has market rents that we can look at. So the other parts of it too is the minimum FICO needs to be 725, and we would go up to a $2 million loan on that program. So I think, given that structure, like, we could really streamline what is required to satisfy income on those types of deals. The other one to mention is about reserves. I think we put out information that, if the loan to value is 65% or less, that we don't require reserves. And reserves typically would be evidence that the borrower has access to liquidity. We were asking for that, and we've now moved away from that if it's under 65%. And if it's above 65%, provided the FICO is above 740, we also don't require reserves. So I think those are just two options that I just want to mention. And if anybody has questions about it, there's no time to answer it today. By all means, reach out to your regional sales manager and have the discussion, or reach out to our underwriting team as well.
Amazing. Yeah, it looks like we're getting some questions in the chat. Oh, and actually, if you could just touch on our broker comp too, because that's important.
Yeah, I mean, you can see it on the screen, but yeah, we definitely want to make sure that, we're taking care of the folks that are bringing the business, right?
Yeah.
Like, the business is not the business without the brokers.
Right. Yeah.
So
Okay, we have some questions in the chat, so I'll kind of just speak to them on my phone here. Um, does the client need to provide a full personal guarantee, or using the property as security will suffice?
typically we are taking personal guarantees. You know, is that 100% of the time? I mean, there could be situations where if it's you know, more sophisticated investor with a substantial portfolio, then maybe not. It just depends on the situation. But generally speaking, yes, we would be.
Okay. Martin, do 20 million plus construction/commercial annually. Need your guidelines on draws and procedures to see if it's a fit. Send it.
Yeah, I could just speak to a little bit to that, just in the sense that, you know, I guess historically, what I'm used to is maybe some of the larger stuff that Martin's referring to, you know, where you would really have, you know, the checks and balances, and you would have the cost consultant and so on. I mean, we can definitely get into that in more detail. We aren't currently, just to mention, you know, we aren't currently funding any construction at the moment, but we are definitely interested in getting into this.
Okay, amazing. Well, yeah, we're new. We're a startup, so we're still building. And if there is a demand for things, I'm sure, you know, we'll take a look at that and see what the appetite is on our side to build some more offerings. Would a unique property be a car wash, restaurant, etc.?
Sorry, car wash restaurant?
Yeah, car wash, comma,
Restaurant?
a car wash restaurant.
Yeah, I mean, for sure, like a car wash is very specialized. To be honest, I don't think we've funded a car wash that I'm aware of. You know, I've not done one in my past. I would say a restaurant not so specialized necessarily, but we do restaurants 100%. You know, maybe some are more specialized than other, depending on the restaurant. But yeah, I would say that definitely the car wash would be more of a specialized property.
We have another question about property types. Are there restrictions on auto mechanic shops, petrol stations, or car dealerships?
I would say not on the. I would say on the gas stations. We're not currently looking at financing any gas stations. Auto dealerships and even auto body repair, like we've definitely financed those. You know, the only thing that you have to think about with those types of property types is, you know, are there any environmental concerns? They tend to be, you know, in areas that may be more industrial type areas. So, you know, you really want to make sure that, you know, there's no environmental liability. A lot of cases you do need to get a phase one, and in some cases a phase two, depending on where the property is located. And it's not just the property, it's also the surrounding area and other and historical uses as well. So just need to keep that in mind when you're looking at that type.
Okay. Thanks. How much equity do we need to put down in order to get a commercial mortgage?
Well, I mean, that's really deal specific. You know, we do go up to 75% on the loans right now, because we are also in secondary markets, not just major centers, and tertiary markets as well. You know, we may not necessarily go to the maximum loan exposure in those markets. You know, so it could range, but you know, in some cases we will do the full 75%.
Okay. Yeah, and can you tell me a little bit about like what's the most common commercial asset class that we see or we have seen? Like what's
I think mixed use is pretty common because you know, especially in some of the smaller centers, usually on you know, the downtown areas of even the smaller centers, like that's typically what you would see, right? You may have some ground floor commercial space.
Yeah.
A lot of times it would be some, you know, residential use above a couple of units. And like I said earlier, in some cases it could be office usage.
Okay.
And so on. But I'd say that's pretty common. We do see quite a bit of industrial, but usually like it's not sort of heavy industrial. It's more light industrial. A lot of industrial condos and so forth. You know, we're seeing those for sure.
I don't see any more questions in the chat, but if you guys have any other questions, please just put them in there and we'll get to them. In the meantime, we have some exciting news and something really exciting to share with all of you. So we recently just launched our new broker rewards program called Wave Makers. And basically fund $1 million a month with us. That's just 1 to 2 deals. And you get access to exclusive perks, just like rate buy downs, commitments, and other amazing things like cash as well. So we'll have Cole play our very special video, and you'll get to learn all about our new broker rewards program.
All right, Lakers, it's time for a new wave of rewards. I'm so excited to introduce Glasslake's first broker rewards program, Wave Makers. Whether you're rising, building momentum, or leading the industry, Wave Makers gives you the power to choose the rewards that matter most to you. What kind of perks do you really want in return for your business and partnership? Fund $1 million a month and you unlock exclusive perks for 30 days. Fund even more and the rewards scale with you.
Do you want service? We got you covered. Think Nexus, think FastPass, think Priority Queue, or get to top tier with a dedicated underwriter for your team.
More money? No problem. Unlock 30 days of an additional 25 bips of finder's fees. Or hit a 3-month spree and see a quarterly volume bonus.
What about pricing perks? Rate buy downs, alternate fee options, appraisals covered. We got what you need to win your deal and your client.
Maybe you prefer sponsorship dollars to use for that cause that is near and dear to you, or possibly for an upcoming team event. You decide. You work with us, we'll work with you.
And what about marketing opportunities? Whether it's expert consulting to elevate your brand or co-branded campaigns to make your name stand out, Wave Makers gives you the opportunity and the tools to really shine in the market.
More than one motivation, more than one reward.
This is Wave Makers,
Glasslake's exclusive
$1 million
rewards program.
Yay. So exciting. So yeah, if you want to find out about what your Wave Maker status is, just reach out to your regional sales manager and they can find that out for you, or visit glasslake.ca/Wave Makers to see what the entire program is all about. But we're super excited about this. So I think we have a few more questions that were posted in the chat. Who do we contact to run a deal past? You can contact your regional sales manager, or you could email sales@glasslake.ca and someone will get back to you if you have a deal that you want someone to look at. What types of rates do we have for commercial? Do you want to take that one, Shaun?
Sure, I did, and at the same time, I do want to mention that we do entertain commercial mortgages as low as up to 200 or as low as 200,000. I mean, sometimes those are hard to place, but we're not. We don't necessarily shy away from those smaller deals. So I just want to mention that. Yeah, I mean the rates do vary dependent on who the client is, the real estate, obviously where we're located in the property. So, and it's what I would say is we're pretty creative on the rates. I find that, we can always figure out a way to make it work for you and for the client. So, I would suggest that, if, the first question is like, what are the expectations of the client? And then, let's see if we can meet those expectations, with a combination of rate and fee. Usually we can find a way to make a deal work. I think we pride ourselves on trying to make deals, right? So for sure.
Okay, RV parks are most profitable commercial businesses in Canada by a mile. Do you finance them? RV parks.
RV parks. Yeah, I think there are some there. I would say yes, but I think there are some more details around that if there's something in particular that you're looking at, then reach out, because in a lot of cases, geography may play a part in that. Are we talking about pads that are rented, or are we talking about the homes themselves being mobile? So I would say if there is something on the table that you have, then by all means reach out and we can talk about it. I hear a lot of beep.
Yeah. Okay. What about empty lands with future construction plans? Perhaps. I don't.
So completely vacant land. And I think, those ones, it really depends on where the land is located and how recent are we talking about when it comes to being developed, right? Like it's one thing to be sort of up north in the farmland space and you're multiple years away from any development. That's a different situation when you're near a major center or in on a plot of land that everything else is already developed. And, the next logical thing would be for that site to be developed. So I think, understanding that situation and that story and that timeline, I think is important to know. So we're not necessarily, against looking at land, but I think, again, it has to make sense.
Makes sense. Multi-unit, my understanding, CMHC would be more competitive in terms of rate, loan size, and amortization. What kind of client or which situation would be a good fit for you guys?
Yeah, for sure. I mean, we're not going to compete with the government insurance program with CMHC. However, what I would say is where we fit typically is sort of bridging the gap to get there. So, somebody may have, an apartment building that they're acquiring, maybe it underperforms today, maybe it's got, like some higher vacancy levels or the rents are below market rents. And, the company buying it has experience in sort of turning around that property, releasing the space, renovating the space, sort of getting it ready for optimal net operating income to then go to CMHC. Like we sort of fit that bridge period for the client to get to that point. So usually kind of 12 to 24 months would make sense. But again, it depends on, how big the property is and, some of the bigger ones might take longer, but if you're into, sort of 25 units or less, like, a 12 to 18 month turnaround, if they have the experience, may not be unreasonable.
A good exit strategy.
Yeah, 100%.
Okay, and then what is Glasslake's appetite on agricultural lending? As an example, the purchase of a farm, equity takeout on a building for equipment or renovations.
Is the building on the property? I think, generally speaking, agricultural, the building is on the property. Okay. I think what I would say is, we're not afraid to look at the opportunities. I think, sometimes, just asking that simple question might, you might want to lean that that's not something that we would entertain. But I think, again, if there's some operation there that, is generating revenue and, the experience of that borrower is there and we can support it. And, I think we're open to looking at it for sure.
Yeah. Okay. Thanks. I think we got to all of them, but if you guys have any other questions, please just email us. Oh, another one. What is your attitude towards multifamily with the immigration policy changes?
Ooh, this is a personal question. I think, I'm not anti-immigration by any means. I think, we definitely have, a shortage of supply, for people to live, whether that's, rental properties. Yeah, I mean, I don't have a problem with it.
Sorry,
personally.
the
More clarity?
yeah, they meant appetite, not attitude.
Oh, appetite.
What is our appetite towards multifamily with the immigration policy changes? And then we also have a question about a commercial retail shop owner looking for a refinance. He holds a visitor visa now.
Yeah, I mean, we don't have any biases towards any type of tenant. So, for us, it's, it all comes down to, is it a good deal and can we make sense of it? So, I mean, I would say the appetite for multifamily rental period is good.
Yeah.
Yeah.
Definitely good.
The second question, sorry, about a retail.
Yeah, we have a retail shop owner looking to refi. He holds a visitor visa now.
I mean, I think again, we'd have to take a look at the details of that and sort of the history there. But you know, I think we'd be open to looking at it and then see if we can make it work.
Okay, so I think that's it. We're a little bit early, which is great. We'll give you guys some time back. But if you have any other questions or any other, webinars you want to see from us, just let us know. You can email sales@glasslake.ca. I think someone posted that in the chat because we'd love to know what you guys want to know more about and, make sure we're hosting these at least once a month. So we're spreading the word. But thank you so much for joining, and we will see you soon and hopefully speak soon. Send us your commercial deals. Shaun will look at them. Commercial Pro, we'll look at them.
Thank you, everyone.
Thank you so much.